Nimesh, well, let's get chatting with Rupen Rajguru, Head of Equity Investment and Strategy at Julius Baer, who joins us on the show. Hi, Rupen. Good afternoon. Thanks so much for joining in. What do you make of the markets? I mean, we've seen a good run from around that 16,800 odd mark, closer to around the 19,500 mark. Do you think there is limited scope on the upside for the headline index? And now it'll play out more like a stock-specific market, say in the next 12 months or so. Maybe we go to 20,000 odd, but what from there? Upside appears capped?
Hi, afternoon, Nigel. No, you're absolutely right when you say that from an index level, last 3 months have been exceedingly good. Nifty is up absolute almost 10% in last 3 months. But if you see, there was a big time correction as far as Nifty is concerned, and almost 18 months of time correction. And one more heartening thing about this rally, I would say, and if I were to compare India vis-a-vis US, is that Indian rally has been far more broad-based. If you see YTD Nifty's, say, as of June end, up 6% but roughly 60% of Nifty stocks have given returns higher than Nifty itself. And the average return of that 60% of the stocks is almost 14%. So that means it's been the far broad-based rally. And if I were to also look through for a bigger S&P 500, same thing, more than 60% of S&P 500 stocks have given returns higher than S&P 500, and the average return is actually there upwards of 20%. So coming back purely from valuation perspective, the more the market goes up, the probably the index level upside might be capped, but there are plenty of opportunities around. And as I said, the broader market is giving much higher returns than Nifty. And I think that trend will continue for next 1 year or so.
Okay, Rupen, so you're sounding pretty optimistic even at these levels. Good to know that. So let me then dive a little deeper. Broader markets, give us some sense. I know you won't talk stocks, unfortunately, but at least some idea about the themes where you still see value and growth prospects.
Surbi, afternoon. See, India story, I think we all know there are three big pillars for the India story, right? Wherein there is manufacturing or infrastructure growth. Second is the consumption story. And finally, all encompassing, it's the financials. So that's the India specific story. Export is there, but export will depend on a lot of external factors. As a theme in markets like these, typically in all-time high level markets, what we have observed should be, there are a lot of mean reversion stories which come into vogue and which, actually plays out pretty well. If you dissect, the top performing stocks in Nifty would be the beaten down tobacco stock or the auto stocks, large auto stocks, which had a huge exposure in the international markets, which nobody wanted to own. That has given phenomenal returns. So as a theme, what will happen within the sector, intra-sector, there would be, opportunities which would be available. But I think as a relative play, I think healthcare looks pretty good. Insurance looks pretty good, even at these levels. And probably now in financials, the big four actually has not given much return. So from here on, actually, it can also lead us to newer market highs.
Right. Rupen, just wanted your thoughts on a couple of sectors here, because from the last time we spoke to now, one change that has come about is that earlier you were underweight or negative IT. Now you think that it's come to valuation comfort zones. You are saying buy large cap IT from a 2-year standpoint. That's one. And second is pharma, because contra call on pharma and OMCs has worked well this year. What does one do with the pharmaceutical pack right now? Is it time to take some profits and deploy it into the IT sector?
Yeah, hi Mangalam, and just to correct you, I was constructive on IT as well when I last spoke with your channel. See, IT typically, as I said, in markets like these, probably if some good news comes from the overall global front, right now I know there are too many moving parts, and whether rate hikes will be there, what intensity of rate hikes will be there. So a lot of corporates internationally are kind of going slow on the discretionary spend, but at the big picture, the cost takeout order flow definitely is there. And see, historically we have seen IT going through phases, and probably I'm saying this is one of those phases. And come this result, I think you might see the IT bottoming, at least the large cap IT, while the mid cap ITs have been flying high. And, actually I've been wrong on mid cap IT, wherein I was not so positive on mid cap IT, but my mid cap ITs have done exceedingly well. But here on, probably I believe large cap IT has good scope of going up from here. And on pharma, again, that's been beginning of the year, we have been positive on pharma. And it has actually worked well, especially in last 3-4 months. And as I think we all have been reading, that the number of drugs which are on shortage is more than 300. And clearly, the key issue which was ailing some of the big pharma names was the price contraction in the US, and we believe, I think we are very close to that, and here on we might actually see stability in that, and hence some bit of valuation re-rating. Some has already happened. I think there is still some scope of that happening even from current levels.
Rupen, you look at the oil marketing companies. For a while now, we've been talking about how pump prices have not fallen, and therefore oil marketing companies like your IOC, BPCL, HPCL will all be making a very handsome marketing margin in the current quarter because their buy price is a lot lower with the decline in crude prices. And brokerages are talking about a marketing margin of 8 to 9 rupees, but the stocks have also run up. Has this news been priced in? And how would you approach oil marketing companies from here on, post the rally?
Hi, Rima. And see, historically, oil marketing companies have always been a tactical place for us. Here it's very difficult to take a 1-year, 2-year view there. And one of the view which we had taken with the same logic that when the entire PSU pack had rallied and the valuation correction had happened there, I think OMCs was one pocket wherein we had not seen any meaningful re-rating, right? And some of the stocks probably a couple of months back were trading at below book, and historically they have traded between say 0.6, 0.7 and to 1.2 on the higher side. So now they all are approaching at the higher end of that, closer to 1.2 book. So I would say that these stocks as would be time to take some profits there, once we see, because as you rightly said, this quarter the results are going to be blockbuster because YOY there was big losses, and now as you rightly said, especially the marketing margin on diesel side has upwards of $9, and you might see a good overall profitability there. But I would say that would be the time to take some profits out there because we are getting into a heavy election calendar, and probably in the run up to the state election, at least the incumbent government will force the BJP led states to cut rates in the run up to the election. So that fear is always there, and hence you might not see a big upside from it.
Okay, all right, Rupen, we will leave it on that note for today. Thank you very much. Always good getting views from you. You have a good weekend, and we look forward to the next chat. Let's take a quick break on that note. And as always, we will check up what's happening with the dealing rooms today, a day of profit taking after a long, long time. So Nimesh comes up with the chatter, and then we'll get Mitesh back in with some final trading ideas for this day.